599. Amsterdam Harbor. A Dutch merchant returned from a perilous sea voyage that had lasted months. His ship was full of spices. His expectations, however, were far greater. He unloaded his cargo, entered the market, and immediately realized that same week, 3 other Dutch ships had filled the same harbor, bringing the same spices. Prices hit rock bottom. Months of danger, expense, and labor converted to nearly zero profit. At that moment, the idea of the world's first global monopoly was born. To understand the spice question, one must understand geography. In the 17th century, cloves, nutmeg, and pepper were not merely kitchen ingredients. They prevented meat spoilage, were considered medicine against disease, and occupied tables as the most tangible indicator of wealth. And all of these spices grew in only one corner of the world, the remote islands of Southeast Asia. Whoever seized these islands controlled supply. Whoever controlled supply determined the market. Whoever could determine the market shaped the world. Portugal was the first power to grasp this reality. When Vasco da Gama rounded the Cape of Good Hope and reached India in 1498, he bypassed the land trade routes that Venice had held for centuries in a single stroke. Portugal became the new master of ocean trade. But once the coast was sighted, it was inevitable that others would follow the same route. When the Dutch arrived, they entered the stage with an entirely different mentality. A small country, limited territory, but an extraordinary commercial culture. Holland was the state with the most developed financial infrastructure in Europe at the time. The problem was this: Dutch companies competed so fiercely with each other that each eroded the other's profits. As ships returned laden with spices, prices collapsed. And as prices collapsed, insufficient money remained to finance the next voyage. Competition was healthy in theory. In practice, it ruined everyone. The solution came in 1602. The Dutch Parliament, the Staten-Generaal, made one of history's most important corporate founding decisions. All rival Dutch trading companies would be merged under a single roof. Its name would be Verenigd Oostindische Compagnie, VOC, the United East India Company. This was not merely a corporate merger. It was the birth of the world's first publicly traded joint stock company. The VOC sold shares to the public for the first time in history. An Amsterdam craftsman, a dock worker, a widow, could invest a small portion of their savings in this company, receive a share of the company's revenue, and become a partner in trade on the other side of the world without boarding a ship. Risk was distributed. Loss was limited. Profit was regular and predictable. The Amsterdam Stock Exchange opened as the world's first organized stock market. Shares began changing hands, their values fluctuating, speculation emerging. Everything that forms the skeleton of today's financial system, stock exchanges, dividends, corporate legal personality, limitation of investor liability, took shape here in this period with this company. But what made the VOC truly unique was neither its financial structure nor its trading capacity. The Dutch state had not merely granted the VOC trading rights, it had also granted sovereignty rights. The company could declare war in its own name, construct forts and strongholds, sign treaties with states, administer justice, and pass death sentences. It had its own army, its own navy, its own legal system. This was not a company operating within a state. It was a state reporting to shareholders, and the practical consequences of this distinction soon became apparent. Nutmeg. Today, an ordinary spice on a supermarket shelf. But in the 17th century, this seed that grew in only one geography in the world was a symbol of wealth. Its source was Indonesia's small Banda Islands. These islands were not merely a trading post for the VOC, but a monopoly matter requiring absolute dominion. The problem was this: the Banda people rejected the VOC's offers. They sold to the company, but continued to sell to other European traders as well. This directly threatened the VOC's absolute power over the market, and against this threat, the company's new Governor-General, Jan Pieter Zoon Cohen, chose the shortest path. In 1621, Dutch forces under Cohen's command and Japanese mercenaries landed on the Banda Islands. Within a few weeks, the vast majority of Banda's population of approximately 15,000 people was eliminated. Those killed were killed. Those enslaved were enslaved. Those expelled went into exile. The islands were emptied. Dutch settlers were brought in their place. Production began with slave labor, and every harvest was made compulsory to sell only to the VOC at the price the VOC determined. Excess nutmeg trees were deliberately destroyed because excess supply would lower prices. Scarcity was not an accident. It was a deliberately constructed part of the system. Investors in Amsterdam saw none of this. They only saw numbers, regularly arriving dividends, rising share values, meticulously kept accounting books. Violence remained overseas. Revenue came home without its shadow, clean and predictable. Perhaps this was the VOC's most lasting contribution to the modern financial system. For the first time, thousands of people could share in colonial violence without witnessing it, without approving it, without even being aware of it. Responsibility dissolved among layers of distance, bureaucracy, and paper. Risk was abstracted. Ownership was divided into small share portions. By the time money arrived, where it came from had long been erased from the records. Capitalism had learned to scale, and this scaling was built on a structure both extraordinarily efficient and skillfully exempt from moral accountability. The VOC's model was quickly copied. The English, the French, others established similar state-backed monopoly companies. Each established sovereignty in their regions. Each blurred the line between commerce and power. The idea that the market was a neutral space of exchange gave way to a more realistic picture. Markets were instruments shaped by those with the power to design them. At its peak, the VOC had more than 150 trading ships, 40 warships, 50,000 employees, and 10,000 mercenaries. Its revenue surpassed many European governments. It had established forts and trading centers in coastal cities around the world. Present-day Cape Town began as a camp the VOC established as a supply point for Indian Ocean voyages. Even during the period when Japan had almost completely closed its doors, the fact that only the Dutch were granted trading permission on the small island of Dejima off Nagasaki showed the dimensions the VOC's diplomatic power had reached. But like every empire, this structure began to collapse under its own weight. In the second half of the 18th century, corruption became unmanageable. Internal favoritism became widespread. Losses suffered in naval battles created both financial and strategic devastation. Costs rose, revenue eroded, debts accumulated. Among the Dutch, the VOC abbreviation came to be known over time, in a sarcastic tone, as vergaan onder corruptie, meaning collapsed under corruption. This was not an official definition, but it summarized the reality. On December 31, 1799, the VOC was officially dissolved. Its debts and territories were transferred to the Dutch state. A company had passed into history, but the system it created lived far longer. Because the VOC's true legacy was not its ships, its forts, or its spice gardens. It was the logic it created. That logic that placed distance between revenue and consequence, abstracted risk, transformed violence into overhead, exploitation into logistics, and empire into an accounting entry. The fundamental mechanics of modern financial systems still rest on the same structure today. Revenues are privatized. Costs are distributed to workers, the environment, and the future. Power concentrates, but becomes invisible. Accountability is lost among layers of complexity. The instruments are different, the language is cleaner, but the incentive structures are surprisingly familiar. The lesson to be drawn from this page of history is not that capitalism is inherently evil. It is something more precise and more useful. Markets do not emerge spontaneously. They are built, designed, maintained, and the rules reflect the interests of the power that writes them. The VOC proved this 400 years ago, on a global scale, and with ruthlessly stark clarity. And this is why, when you want to look at the history of modern finance, you must always return to that small Dutch company as a starting point. Because with its stock exchange and its slavery, its shareholders and its massacres, its commercial genius and its moral collapse, the VOC is the plainest story of what money, power, and humanity can do together.